Hello and welcome to Real Estate Conversations with Harsh. Today, we have Mark Baltazar, the co-founder of Peak Multifamily Investments, a real estate fund management firm dedicated to help Canadians grow their wealth through apartment building investing. Mark began his real estate investing career in 2015, and in 2017, he started investing in multifamily apartment buildings and currently owns and manages a portfolio of $40 million. Welcome, Mark, to the show. How are you?
Thanks, Harsh. Thanks for inviting me on your show, and congratulations for starting a podcast. It's not an easy thing to do, and
Yes.
it seems like you've been pretty consistent at it. So that's amazing. That's the key: consistency.
Thank you very much for that. But apart from that, how are you? How are you in the market? Like currently, we are in some difficult times in the market in terms of real estate.
Yeah, I mean, I think obviously there's been a shift. I mean, interest rates have had an impact. It's not new news, but it's I think investors are still adjusting, trying to figure
Yes.
out what's the best way forward. Uh, one of the perspectives I have right now is that I think we're a little more certain in terms of what the next 12 months hold in terms of where interest rates are going to go. Whether it goes up another 25 basis points, or there's a hold, or there's a cut. The point is, we know at what level these interest rates are going to be at. There's not going to be significant cuts over the next 12 months. So I think there's a little more certainty as to where debt pricing is going to be, right? So, for
Yes.
investors looking to buy, you have an idea of how to underwrite your debt, at least bridge financing. Now, the CMB is still kind of fairly volatile on a day-to-day basis, but, compared to 12 months ago and even 6 months ago, where we didn't really know where rates were going to go or what was going to happen, I think now there's a little more certainty that the fog is clearing. And so we can see a little bit further, maybe not that far, but we can see a little bit further today than we were able to 6 months ago.
Yeah. Well, no, I completely hear you. And yeah, so what's your idea where the rates would go, and where would the commercial multifamily in Canada, or I would say, where is it headed, or current state, and where is it headed in the next 12 to 18 months?
Rates, I don't know. I don't know. I don't have the crystal ball, but here's how we're underwriting. We are underwriting that, and again, based on the rate that we look at primarily is the longer term debt rate based on the CMB, so the Canadian marketable bond. So that's the factor that we look at probably most often, because it determines kind of what our refinance is going to look like, what our takeouts are going to look like. Where's it going to be? We're modeling right now about 4.5%, 4.75%, right? We just spoke to a lender that's going to get us a little bit lower than that, but we're still modeling at 4.75%. And so pretty comfortable with that based on some of the spreads. We were talking about spreads before we jumped on here. And so again, that's what our underwriting looks like. If it goes below that, then great. Now, the other thing that, of course, we're talking to our lending partners about is, rate buy downs. Can we get it below that, 4.75% or 4.5% with a rate buy down, which definitely helps. So again, we're pretty active right now on a refinancing standpoint and an acquisition. So this is literally on a daily basis. We're on the phones with our lending partners, just to, again, put the files together and figure out kind of what the end refinancing numbers look like. But that's what we're underwriting at right now. In terms of values, yeah, listen, like cap rates have gone up, right? Cap rates have gone up. I think it's a blip. The future, I'm super bullish on the future. I mean, you look at multifamily essentially is in the or multifamily operators, multifamily assets. They're servicing a significant need in Canada, which is housing. And the need for housing, I don't think, is going to slow down anytime soon. with immigration, and then supply, right? Supply is not new, like the shortage of supply is not new news. I mean, this has been an issue for decades, hasn't been solved. I think there's some initiatives now that are attempting to address the supply issue, or at least the speed in growing supply. And we can talk about housing units, which is the streamlining of approvals at municipalities for the development of housing, but specifically rental housing. So we'll see where things go. But I think for I don't know, for the next 5-ish years and beyond, we're going to have demand that outstrips supply in most major markets in Canada.
I agree. I agree. And it's not only going to outstrip, it's going to outstrip by far. Like there's no match. If you're a million immigrants are coming here, they need place to live. And considering what the current average is, it's not even like it's 5 times lower than what is needed on an yearly basis. So I really don't think we'll have ever a demand supply match in like next 1 to 2 decades,
Hmm.
unless
Yeah, I
there are
mean
drastic changes.
yeah, for sure. We'll see. We'll see how far it goes. I mean, yeah. So I mean, so bullish on multifamily. I mean, it's
Yes,
stable asset class in my perspective, and I think there's still a lot of work to do for the industry, and still
yes,
lots of opportunity for investors to be able to provide housing, for people.
absolutely. Absolutely, yes. Okay, now coming to the interest rate part, and we have also seen that people are, especially the vendors or the sellers, they are not really lowering the rates, right? As in terms of pricing. So prices are still kind of similar, may have dropped a little, but not that much as people were hoping. So uh, normally people do question us that is investing in real estate still a viable option, or we should wait, or what are your thoughts on this?
Um, okay, without sounding like I'm pushing real estate on people, um, not now is the time to buy.
Yes,
6 months ago was a time to buy. I think you can buy at any time. And so here's the thing you got to look at is you have, underwriting is a critical skill for multifamily investors, whether you're active as an active investor, someone that kind of runs an investing business. Underwriting is critical. Even as a
yes,
passive investor, so someone that's investing in someone else's deals should also be able to underwrite, right? And underwriting is just the exercise of assessing risk and what investment returns are likely to happen based on a bunch of different factors. And so if you underwrite with proper assumptions and you take into consideration the current environment, and a deal, an investment hits the metrics you need to hit it, why would you not invest in it? Again, um, understanding that you've accounted for all of the critical factors, higher interest rates, prices have come down, right?
yes,
So, in the markets that I'm in, you can buy, value add buildings at 200,000 a unit. 12 months ago, let's say, that was probably 250 a unit, right? 230, 250, sometimes more, right?
yes,
So we have seen a stabilization. Cap rates have gone up, right? Cap rates have gone up, values have stabilized. And so there's opportunity today. The other thing that's happening is to your point, let's say 12 months ago, even 6 months, let's say 6 to 12 months ago, there was a larger gap between what sellers wanted and what buyers were willing to pay. That gap has shrunk, right? To the point where now there's transactions happening. Buyers are willing to pay what sellers want, and sellers have come down, right, to be able to offer properties at prices that buyers are willing to pay. The other thing that's happening to close that gap are vendor takebacks. So I am seeing vendor takebacks more often than I have before, and some significant vendor takeback deals. Typically, deals with vendor takebacks are flying off the shelf, let's say, fairly quickly, because vendor takebacks typically have rates that are lower than bridge financing, at least what I've seen right now, sometimes half. And so that makes a significant impact on someone's deal structure and deal outcome and ROI. So back to your original question, I know a long-winded answer, is now a good time to buy? Yeah, I mean, I think if you're trying to time real estate and time purchase, that's probably a little bit more speculation and not necessarily investing. But if you're again underwriting properly, factoring all the things that are important to multifamily, such as interest rates, obviously it's just one of those things, and the deal still looks good, and you've
Mhm.
accounted for the risk, then yeah, why wouldn't you move forward if you have a goal to achieve something financially?
Wow, good. I also wanted to, I know you're high on mindset, right? How important is it to develop a mindset when building wealth through real estate or building real estate portfolio as an investment portfolio?
Yes, well, super important. And I think so. My perspective on mindset is if you're trying to do big things and you're trying to grow, and you're, by definition, if you're growing, you're essentially getting out of your comfort zone. You're doing things that you weren't doing in the past. You're changing, and so when you're changing and you're confronting situations that you have not been in before, new situations, you need a strong mindset. There's a lot of talk about strong mindset, but what does it actually mean? And so a few months ago, actually, I just kind of did some reflection. I did some research, and I reflected upon some of the things I learned actually in my previous career. I used to be a management consultant, and during my
Yes.
managing consulting days, I'd spend a lot of time with C-suite executives and helping them figure out, what's next for their company. Kind of what's the next step? What products should we be launching? What divisions should we be launching? How do we grow? Right. So really cool, really fortunate to be. I worked with some really smart, cool people, and some really great companies. And working with now working with some coaching clients. I do some coaching with real estate investors to help them scale. And the insight that I had kind of from both of those worlds coming together is that there, in both of those situations, you need a strong mindset. But what does it actually mean? Like, what does it mean to strengthen a mindset? And a lot of times it comes to um, things that hold people back, right? So, what are the things that hold people back? What are the things that hold people back from taking action? And there's a few things. Number one, fear, right? So fear holds people back. But why do people have fear? Typically, they don't have the right people around them. Um, and I'm not saying kind of the hurrah people around, because that's important too. But people that have done what they want to do. Um,
Yes.
Clarity, right? Clarity in next steps, having a blueprint. Not having that holds people back. So when you're unclear, you don't know what to do. And when you don't know what to do, it kind of really messes with your mind. You feel like you're spinning your wheels a lot. So once you have clarity and specifically have an understanding of the steps that need to happen, that helps strengthen your confidence, reduces fear, you can move forward. It all ties into mindset. Uh, I mentioned surrounding yourself with the right people, right? People that have
Yes.
done the things that you want to do. So, and growing the business that we have today, we've hit hurdles, right? You have to hit hurdles when you're growing, right? And so how do you get
Yes.
around that? And so we were able to get through and bust through those hurdles, and we're gonna experience more as we grow, right? It's inevitable. Um,
Yes.
Having a clear blueprint, having clarity, having people that have done what we want to do around us, um, and discipline have all kind of helped kind of with the mindset piece. So again, back to your question, I know long-winded answer. Yes, super important. Uh, what what I found difficult with people that talk about mindset is I haven't really found a lot of here's what you do to strengthen it. And so the what you do to strengthen it, I think, is those things: get clarity, have a blueprint, surround yourself with people that actually have done the things you've done or want to do, sorry. And and uh and in terms of kind of fear reduction, there's some strategies. So there's specific strategies that you can deploy to help strengthen that mindset.
Oh, okay. Can you give one or two for the viewers or and the audience?
Yeah. So, okay. So look, so one of the, especially right now, okay, right now, overwhelm. Okay. This feeling of overwhelm often impacts someone's ability to move forward, right? The
Yes.
feeling of overwhelm is a mindset. It's a mindset thing. And a lot of these things, it is a mindset piece. Okay. So how do you conquer overwhelm? Okay. And right now, overwhelm is a fairly, um, I would say, consistent kind of theme in, some of the people that I work with. And it's because there's a lot of stuff happening and a lot of stuff
Yes.
happening quickly. Interest rates are going up, deals are falling apart, lenders are changing their guidelines.
Yes.
CMHC just came out with a reinforcement of a older policy yesterday that's causing people to change. So all this stuff's happening. And so with all this stuff happening, it's like, okay, what do I do next? Right. So how to conquer overwhelm here, very simple strategy. List all the things that are really that are you feel overwhelmed with right now, right? Lending environment, trying to close the next deal, trying to generate cash flow, um, going to speak with my investor partners. All these things are causing a little bit of anxiety, right, for people. As for
Yes.
example, okay.
Yes.
Now prioritize those, right? Which, if can you address one of those things that will release um some of the feeling of overwhelm? Maybe you have to do two, and specifically just outline 2 to 3 steps that you can do today that are going to address that component that's causing some anxiety. Seems like a simple step, it seems like a no-brainer. The key thing is writing it down. Once you see it on paper, you will, for me anyways, and some of the people that I've helped coach in this area, you will start to feel a little bit of relief because now you know when you wake up the next day, okay, I'm going to hit 1, 2, 3, right?
Yes.
Just the act of going after kind of 1, 2, 3 without having to think about it. The problem with the feeling of overwhelm comes from overthinking. And if you can decide what your actions are going to be and then take action, you're not really thinking so much about all the stuff you have to do. You're just taking action, right?
Yes.
So that's a fairly quick and easy way to reduce the feeling of overwhelmed, like today, like right now. So whenever this podcast comes out, if someone's feeling overwhelmed, just try, like, for 30 minutes, experiment with that strategy, and it may or may not work. I think it's going to work. It works for me. It works for the people that I work with. Um, Simple technique, right? But it's getting the stuff down on paper. Then you know it exists, and just focusing on taking bits of action, right?
Yes.
Every day is one step. Just take one step, take a bunch of action that day, and you will feel a little bit better.
Absolutely. Wow. Wow. That was a very detailed, in-depth technique, which I would try myself too, because right now it's just so much work that you are right that people are feeling overwhelmed, and
There's a lot of
I'm
stuff.
also one of them. Yes.
Yeah.
And
The other thing that contributes to overwhelm is uncertainty, right?
yes.
What's going to happen with the next rate announcement, or, on the
Yes.
20th, October 25th, or whenever it is, right? What does that like? So you start thinking all these what ifs, and, typically I think human nature is to think about the worst outcome, right? 98% of the time that doesn't actually come to fruition, right? But we overthink things, and again, I'm saying this because I'm guilty of it too, and that happens to me, right? And so I use some of these techniques for myself. But anyways, that's my that's my thoughts on just one technique. That's just one way, one
Yes.
strategy.
Yes. No, and I understand. Like we are humans, right? Everything happens with everyone. It's just a matter of how you control it and how another person would control it. It'll be different for anyone. So now coming to your fund, uh, I know you started with like how everyone starts JVs and shareholders and all those kind of things, and then you moved into a fund.
Yeah.
How have things changed from like a normal or JV or shareholder agreement deals to now having your own fund? How
Mhm.
have things changed for you in terms of, is it easier now? Is it more challenging, or uh, like raising funds and getting deals done? And also the credit worthiness, because normally when you're into a normal space, when you're only doing small JVs and small shareholder agreements, there's not much credibility that you can move to a bigger deal, right, in the market.
Mhm.
But when you have
Mhm.
a fund, I feel that there is much more credibility. But what are your thoughts onto it?
Um, yeah, so I could tackle a couple of those questions. So in terms of credibility, uh, does a fund give you more credibility? It maybe, or maybe it does, maybe it doesn't. I think someone. So I think let me say this is a fund for us, anyways, serves a purpose, right?
Yes.
So I think, and we took the decision to move forward with a fund, obviously very seriously. It's a significant time commitment. It's a very
Yes.
long-term commitment. Um,
Yes.
it financially, it's a significant commitment from
Yes.
ourselves, the founders, to kind of put into this because there's a lot of stuff that you got to invest in to create the structure. Um, but it's a means to an end, and the purpose really for us was scale, right? So how do we scale? Now, you can scale without a fund, right? There's other ways to scale. You can continue doing GPLPs. You can continue doing shareholder agreements. I think GPLPs is probably I believe a better structure if you're going to scale and bring on investors.
Yes.
um and so, is it easier? It brings forward a new set of challenges for sure, right? So there's a little bit more compliance work, right? There's more reporting, right?
Yes.
There's more regulatory activity that happens. So on the administrative side, there's more stuff to do for sure. What it does do though is it opens up our investments and an opportunity to invest in Peak Multifamily and the apartment buildings that we have in the portfolio to more people. And that was the big, you know, uh, decision point for us is,
Okay.
we'd like to provide access to these apartment buildings to non-accredited investors, um, allow people to invest with registered funds, RRSPs, RESPs, TFSAs, LIRAs, kind of
Yeah.
the whole list of registered funds. And so to do that, now, yes, you can do that with second mortgages, but that's on the debt side. We wanted to do it on the equity side. And so the mutual fund trust, the fund allowed us to do that.
Yes.
So, um, was it easier? No, there was a lot more work actually. It's a lot more work to set up a fund than it is to continue with the GPLP. But the end goal for us is just to get larger, is to scale the portfolio. And we felt that that was a major piece to the puzzle to get us to where we want to be from a size standpoint. Um, yeah, I mean, we looked at and we spent a lot of time thinking about, is this, do we launch one or not? Pros and cons. Talked to a lot of people in the industry that have done it, have
Yes.
one, have decided not to do one, got their perspective. So we formed a very well-rounded perspective, and we felt that it was right for us to do that.
Okay. And has it helped in terms of scaling? Like, where were you before you opened the fund, like in terms of portfolio? And sorry, when did you open the fund? 2021 or 2022? Last year, right?
So we started working on in 2022 or early
Yes.
2022. It officially launched beginning of this year,
Okay.
2023.
Okay.
And so the first order of business, uh, are what we wanted to do is, because sometimes funds launch without properties, and so they'll raise capital first, raise a bunch of capital, and then go out and buy property. We have a portfolio already of 9 apartment buildings, and we wanted
Yes.
to see, so there's an opportunity to start the fund with assets already, which is a benefit to the investors because money coming in is not just sitting idle. As soon as capital comes in, the ROI calculator starts essentially. And if it's not
Wow.
an asset, it's the ROI calculator is still going. So we wanted to, we looked at the entire portfolio, and ideally we would have moved all buildings into the fund, but we didn't because a number of them, or most of them, we've already squeezed a lot of value out of them. But there were
Okay.
two in particular, a third coming on board, which will be closing, that still had a lot of value available and lift available for the fund to take advantage of and realize. So we've moved 2 in, third kind of it's on its way, and then now going forward there will be acquisition. All the
Okay.
acquisitions that we make will be kind of going into that fund.
Very good. Very good. And for the audience and viewers, if somebody wishes to invest in your fund, now, what's the minimum? Is there a minimum investment or some kind of thing that you look for in a person, or like anyone can do with $1,000, $2,000 as well?
So the minimum investment is 10,000. And
Okay.
so that makes it, fairly accessible for people, to
Yes.
invest in apartment buildings. I mean, you know this, right? To buy an apartment building, it's, millions of dollars, typically,
Uh,
depending on the market, but millions, at least the markets we're in, millions of
absolutely.
dollars to be able to buy. And so, $10,000 minimum investment for people to get exposure to commercial multifamily for all the reasons we talked about at the beginning, need for housing, etc. This
Absolutely.
is an asset class that's has very, very long runway and very stable. It allows people to include that in their portfolio. The other thing, as I mentioned before, is you can use registered funds, right? So that's been, I'd say, one of the biggest draws
Yes.
for the fund is to be able to, invest in something like this, invest in real estate, in equity with registered funds.
Okay. And when people need to invest, they just go to peakmultifamily.com, or do they have to go somewhere else or contact you?
So they could absolutely contact me at, mark@peakmultifamily.ca, or they could go directly to our website at peakmultifamily.ca. There's a bunch of information there. They can, download our investor package just to see kind of what our perspective is on the market and kind of more details about the fund. And at that point, so we do work with an exempt market dealer and dealer representatives at the exempt market dealer that then talk to the investor to make sure that the investment is suitable for them, right? To make
Okay.
sure that given what our strategy is and the risk profile of the fund is suitable for that person. So there are a bunch of compliance checks which you kind of need to have, and to ensure that that it makes sense. And the difference between kind of what this fund offers versus how we were doing deals before, it's open to eligible investors. So it's not just accredited investors. So the income threshold to participate is not significant. And so if someone is looking to get exposure to multifamily, and again, doesn't have to be hundreds of thousands, doesn't have to be millions, $10,000,
Yes.
this makes it very accessible to them.
Okay. And is there a lock-in period? So let's say if somebody gives you $10,000, I mean, not give you, I mean, invest in the fund. Is there a minimum lock-in period, or that they have to stay in the fund for a year or so? Or it's like they can invest today and then take it out after 6 months if needed?
So private equity is not as liquid as like stocks or
Yes.
real estate investment trusts on the stock exchange, which you can kind
Yes.
of trade daily, right?
Yep.
So what we suggest is that if someone has a time horizon of 3 years or more, then this may be suitable for them.
Okay.
Anything less than that, this might not be the right investment for them. Again, you know, they'll have a conversation with our investment advisor to kind of determine the specifics about that. But if they're looking for short term, 6 months, probably not the right thing. If they're looking to grow wealth long term, this definitely is an option that they should consider.
Absolutely. And since real estate is always a long-term play,
Yeah.
that would reap you benefits. Otherwise, if somebody is putting like $10,000, $20,000 and they're taking it out after 6 months, that may not seem that great, because there would be little to no return that would be accumulated. But in 3 to 5 years or 10 years, yes, that's going to substantially grow.
Yeah, absolutely. I think there's like anything, like, one of the questions that gets discussed or talked about, or I get asked often is, what's the best investment, right? I don't know
Yes.
if there's a best investment. I think there's an investment strategy for all types of goals. So
Yes.
once you figure out what your goals are, short term, medium term, long term, then you figure out what strategies are kind of best for that one, right? For this fund, this is a medium to long term type investment. Short term might be other things, right? Like it's under 12 months. There's investment vehicles that can deliver, where you can kind of that are more liquid.
Yes,
Yeah.
absolutely. No, I completely agree. I completely agree. That was a lot of information on mindset and the fund, how it operates, and how. So, a message for audience and viewers, people, if you want to reach out to Mark, his name is Mark Baltazar, and Peak Multifamily Investment, peakmultifamily.ca is the website. You can get in touch with them through there, or send it to Mark at peakmultifamily.ca. We'll also be posting all the social handle links when we
Awesome.
release the episode.
Cool.
Yep.
Yeah, great.
Thank you. I am done with the questions. That was so informative. I'm thinking of that mindset strategy still, and I'm going to, once we release the episode, I'm going to definitely look into it again and practice it. Hopefully
Actually,
that helps.
you know what? I don't know if we're still recording, but if we are, and I forgot to mention this. So I did a presentation live
Mhm.
in front of fairly large audience of real estate entrepreneurs, and it was about this mindset.
Okay.
And it went really well, really good feedback. People took action on the things I talked about. So because of that, I presented it online again to a smaller community of real estate investors. So that's available. So Harsh, I'll send you that link. It's
Okay.
basically a recording of the mindset presentation that I did, which talks about some of the strategies that I mentioned here. Happy to send it to you. You can share it. There's no, like, you don't have to put contact information or anything. It's just there for people uh, to use, access, and it's just because of the feedback I got, I felt like I wanted to share it, and also I've shared it with non-real estate entrepreneurs and have gotten some really good feedback. It's not, you know, it's I think the insights it transcends real estate. It's not really about real estate in general. It's more about although it was originally created for a real estate audience, entrepreneurs essentially, right? So it's helpful for entrepreneurs. So I'll send you the link right after this actually, and feel free to for you to watch, of course, but you can feel free to share it as well.
Oh yeah, we'll put the link in the episode.
Cool.
All right. We'd like to thank you, Mark. Thank you so much for your time and coming on the show. We really appreciate your time. Thank you so much.
Yeah, awesome. It was a pleasure, and thanks so much for allowing me to kind of talk and share my story.
Thanks.